Hello, Monday.
Yes.
Hello.
Hey, how's it going, guys? It is indeed Monday. Happy Monday.
You sound like a radio broadcaster with your new mic.
Actually, it's my other mic, so who knows? I guess the
It's your
technology
voice.
gremlins are smiling upon me today.
Nice.
Um, okay, here,
Hello. Yeah.
November 6th. October is just an afterthought, and wow, time is going by pretty quickly. November 6th, 2017. Welcome to another edition of Office Hours. You got myself and Steve Gomez coming at you today. But before we get into the fun stuff, just 1 second to take care of the legal mumbo jumbo. Just want to make sure that everyone in attendance is aware of the fact that we share all this content with you guys strictly for educational purposes. So please don't misconstrue what we present here today as a solicitation to buy stocks or do any type of investing. It's not investment advice, strictly for educational purposes. If you do need investment advice, please seek out a registered investment advisor or some other licensed individual that can help you out with that. All right, and just a quick little run through here for you regular attendees. Please bear with us. Just for the new people, want to make them all aware that not only do we have the great technology that is Trade Ideas, we have a very vivacious community around it. All right, we've got the Traders Room, which is hosted and moderated by Barry Anderson. That's open every day. It's really a good deal because of the price, which is zero. So you don't even have to be a subscriber to Trade Ideas to get in there and see what the trading room is all about. So if you haven't done that, if you're not taking advantage of that resource, don't shortchange yourself and get on in there. Of course, today's office hours with myself and Steve. We got Trade of the Week. Steve takes the helm tomorrow. He's got Andy Linloff riding shotgun. Of course, we change it up just a little bit on Wednesdays. Bring in Dan, our CEO, and Brad, our Chief Technical Officer. And then Andy rounds out the 1-hour webinars on Thursdays, and I ride shotgun with him. Friday, we do something a little bit different. It's been getting lots of good reviews. People are really digging it, and that is the 3-hour support webinar, which is every Friday from 11 to 2 p.m. Eastern Time. So if you haven't been taking advantage of that, by all means, hop in there. You can come at us with just about anything Trade Ideas related, with the exception of Brokerage Plus. And in the future, you will be able to come at us with Brokerage Plus questions once it comes out of beta. It's still in beta right now. All right. And of course, subscriber growth since we introduced Holly, our AI, who pretty much just tore it up today, and we're going to get into that as well. But, you know, the chart speaks 1,000 or more words here. People are really liking the AI. It's catching on. So if you are a basic subscriber, you might want to think about hitting that upgrade button. Well, Steve,
Yes.
here we are. Here we are at the agenda for the day. So if you're ready, I'll kick it on over to you.
I'm always ready. Send it over.
And we will take a peek here.
All right. So welcome to my screen, minus all of my little ponies and my unicorn Pinterest boards. Kidding, of course. Going to go over the major indices, and not really much to add to what we've been talking about. I mean, here's this lowly old, let me fix this a little bit, trend line, which was very much intact for much of the summer. A little bit of wishy-washy witness here, but the market snapped right back, got right back above this trend line, and I'm just going to kind of continue that trend line. I want to keep an eye on it. We are way above that trend line. Some would probably say we're due for a shower or a bath or a pullback or some sort of consolidation, but the path of least resistance just continues to grind higher. We've also survived the seasonality of October, when a lot of people fear the volatility. You know, October crashes is always the month that people try to associate with that crash volatility. So we're right smack staring the holidays right before us. And typically, seasonally, holidays are kind of low volatility, drifting higher type action. But, you know, seasonally, we're not going to get caught up on seasonalities because, you know, the seasonalities, like I said, call for October pullbacks, and we certainly didn't see one. Spiders, a new S&P 500, a new all-time high again today. Let's check the volume here real quick. I'm just curious for my own edification. Normal volume, relative volume, right under 1.0 for the spiders. Path of least resistance remains obviously up. These little wicks also rephrase that, these wicks certainly help us also show where the buyers jump in. These downside bottoming tails continue to kick the price back into play. Path of least resistance remains up. Qs, same thing. Here's a really nice wick I was just talking about, reversal wick, and bounce right back up to all-time highs today again in the NASDAQ. Diamonds, Dow, still very, very narrow range day on the Dow, but nonetheless, this is still path of least resistance remains up. Continuation pattern very well could be in place here off of this little flag and this little bit of sideways action here. What's unusual, out of the four horsemen, is the Russell 2000. This thing is just perplexing. I mean, it cannot get out of its own way. It refuses to sell off below these levels, and because of that, you can see the third attempt to sell off below that level was negated. Well, I went ahead and threw in a price alert, which is an active price alert. So the next time IWM does trade below that, we'll be watching. But that seems to be a line in the sand, without a doubt, for the Russell 2000. But in the other respect, it just can't get out of this range. I mean, we're almost talking about 2 months of this now, back and forth, which is acceptable to a certain degree. But my gosh, this is one of the longest flag patterns, consolidation patterns I've ever seen. I know a lot of people have been watching the IWM, traders that I know, trying to make sense of it, and there's just been a lot of head fakes. Head fake to the upside on that gap up, and head fakes to the downside. So the IWM, the Russell 2000, is still very perplexing, but it doesn't fault the fact that the S&P, the Qs, NASDAQ, and Dow are just on a tear. There is nothing really negative to point to. The volumes are there. We check the volume in the Qs, 1.22 normal, above normal, and the Dow, the DIA, above normal volume. So we're reaching, all-time highs again on normal to above normal volume. I can't find anything wrong with this setup. These, again, these downside wicks keep kicking the price back into play. So as my good friend Brian Shannon likes to say, this market is innocent until proven guilty. He also likes to say the path of least resistance. In this case, the path of least resistance remains up. And I don't know, nor would I even try to speculate what could turn this market around. All we can do is study the footprints in the sand. So everything is still a go on the upside for the bulls. For those that missed it, I mean, I'll mea culpa once again. Way back here, we were bouncing off these trend lines over and over, and then we had a couple of big distribution days. Big downside volume here, bounced up on low volume, big down volume distribution day, followed by another distribution day, which closed below this trend line. And I back here said, hey guys, I'm gonna put my bearish hat on. I think we're getting ready for something. But, big but, if we get back and trade back above these recent highs, I've got to flip my hat back around and have an open mind, because if you can't do that in trading, you're going to get run over. And sure enough, I had to eat my words, eat my hat. I was bearish for about a week and a half here. That has way in the rear view mirror as we continue to move higher, and again, demonstrating that you got to have an open mind in this market. You can't argue your point. The market is always right. It doesn't care about your point. I want to go a little bit further. Jamie didn't know I was going to do this, but I wanted to just highlight the sectors of strength today. Natural gas, oil, the commodity of oil. The oil service sector, USO, the commodity of oil. Energy, silver, gold miners. Okay, we're talking a lot of heavy stuff that is tangible, things you can drop on your foot and say, ouch, with the exception of energy and, of course, K-Web. So kind of defensive in nature with the strength, not showing up so much in the financials or the banks or the retail, but the strength today was kind of defensive in energy and gold miners. And I'll just end with this one here, K-Web. If I double click into this, this was the trade of the week last week. We'll talk a lot more about this tomorrow, but doing really well. And the trigger was off of this little spike down here. That little spike came from the 3-day bounce alert that I've been working on. So KWeb, which was the trade of the week a week ago, is doing just fine off of that wonderful entry, which is the real intent of this alert. And so good to go there. I did notice, however, TUP, if I double click into TUP today, this alert came through. And as you can see, I have marked this alert up around, I don't know, 57, 75, whatever you guys want to maybe write down on a piece of scratch paper. But TUP, Tupperware, looks a lot like KWeb did about 6 days ago. Okay, and look at what we had, a nice bounce off of there. So TUP, just kind of throwing that out there. Whoops, TUP, throwing that out there for a trigger tomorrow above 57.75, we'll call it. Could very well turn into something good, because if those that have not seen how well this particular strategy works for a 3-day hold, I'm just going to take a moment here to show you, and then let the data speak for itself. And last week's trade of the week, KWeb, speak for itself when it comes to looking at TUP Tupperware for a possible entry if it breaks above today's high in tomorrow's trading range. I might have to come back to this. This is running really slow. But the back testing on this particular scan is really good. Here we go. We're picking up a little bit, and it's scanning for a 3-day hold, saying, all right, Mr. Smarty Pants Trader, what happens if you trade these alerts that come out of this third 3-day bounce and hold them for 3 days? How would that have gone, over the last 3 months? Well, we're getting slow again, but I can tell you that this is a very viable back testing scan, and it's a great hold for 3 days. I'm going to go ahead and close it because we got a lot of stuff to get to. TUP Tupperware, you might want to mark it up, guys, at 57.71 or whatever the high was today. If it triggers tomorrow, it could turn into another KWeb type of play coming off of that same alert. So I hogged a little bit of extra time there from you, Jamie, and I know you didn't know I was going to go there, but I felt the need to show that to people today that maybe want to just at least mark something down to watch tomorrow, TUP.
Hey, no worries, man. And we always like
freebies.
More good stuff.
Free stuff. All right, so let me pass it back to you. I'll do that for you, Jamie.
Thank you.
There you go. All right, got it.
All right, so everybody should have eyes back on me now. So expectations, right? So just to kind of peruse this real quick. Expectations, of course, we all know how we can get decent expectations on a day by using our compare counts. So I'll show you what the readings were that I had after the first 15 minutes or so this morning. Then we'll get into Holly. And as Steve was illustrating with the sector heat map that I will also cover, it also told me there was massive buying in the first 15 minutes in the oil and gas stocks, airlines as well. Oil stocks continued and did quite nicely. Airlines presented a nice little pop, but they eventually came back down. But very nice short-term opportunity in the airlines, and then some massive opportunities in the oil and gas sector. So we'll get into that in just a second here. So let's talk about our expectations. And expectations are one of those things that are constantly, they're constantly moving around. We have to constantly adjust our expectations based on what we're seeing in the markets. We have to stick to our rule sets religiously, but we always have to adjust our expectations. So having said that, I'm just going to drag what I was showing right here from my Twitter feed that I put out 15 minutes after every open today. And on the big cap movers, the mega caps over here, any stock 4 billion or 5.4 billion, pretty much all in one basket today. And we can see 58, 57% large volume buying in the first 15 minutes. So how am I using this information? Well, typically it means something, right? What does this mean? Well, the institutions are doing a lot more high volume buying in the first 15 minutes than they normally do, which we can extrapolate out to the fact, well, there's probably some big buy orders on the books for a lot of these stocks today. So, the yardstick here is typically 55% is the number that we want to key off of. If we see 55% or below, that is a bias, but it's a little bit weaker of a bias. And on those days, you have to be a lot more careful. On days where we exceed 55, well, the trend's going to be a little bit stronger. There may be continuation in certain sectors. Once you start seeing these readings get above 60%, 70%, which does happen from time to time, but it's just kind of like going back in time when Steve and Andy and I were all coming up in the industry, Dan, Brad, the whole crew here. You would hear these really experienced traders that we tried to emulate always say, hey, make most of my money in 2 to 3 days every month, because that's when the volume really kicks in and you can just really press it. Well, it's easy to say that, and it's always easier to look back in hindsight, but developing a methodology that helps do that for you on a daily basis, not so easy. Well, from what I've discovered here, these compared counts do a pretty good job at that. So 58, 57%, not huge, but a very strong buying bias by the institutions, leaving those footprints in the first 15 minutes, which helps me go, okay, there's going to be some opportunity here today to the long side. Of course, I can't say that there's never short opportunity, but you get my point. The predominant direction, more stocks going up today than going down. All right, so after we see those readings, we've tempered our expectations. Hey, could be a nice day to the upside. And boy, let me tell you, Holly got started pretty quick this morning. So here's her blotter. And by the way, let's see here. John, your question. John had a question before we started about, can we cover how to add Holly alerts to our default screen? Now's a good time to cover that, so let's just do this. This is Holly's strategy panel. This is Holly's all trades blotter we can see right here. So what I'm going to do is I'm just going to kill it, and I'm going to kill her strategy trades as well. Now we have no Holly up there. So of course, assuming you are a premium subscriber, we just go to New, and we click on AI strategy window, at which point the strategy grid will be spawned, showing all of the strategies that Holly brought to the party today. So we can see
I like to call that the parent window.
Yes.
Now we need the child window.
Main window, parent window. So this is the parent window, as Steve likes to call it, which shows us all of the strategies that Holly came to the party with. And we can see a nice 1, 2, 3, 4, 5, 6, 7 longs with 4 shorts. Now, just because a strategy makes the cut doesn't mean it's actually going to fire up the trade. We can see the trade count today. We can see Sunrise Mover was pulling a lot of, carrying a lot of water today. 5 trades total, 3, 2, 2, 2, 2, and 1 respectively. These guys fired 0. No big surprise there considering what the market did today. So if we want to see the individual trades, all we have to do is right click. I prefer to show view all trades. Now it is possible to make 2 different trades, or blotter screens is what we could also call this thing. One for open trades, one for closed trades. But during the market hours, if there is nothing in the exit reason column, then that trade is actually open, and you'll see the price on the open fluctuate. If we're looking at risk off here, any open positions will always be flopping around right in here, up or down. Of course, the market is closed. We've got exit reasons and all of these things. But look at the time that Holly started trading. So I already had my expectations based on my compare counts, thinking to myself, okay, well, could be a nice up day, lots of opportunity. Well, Holly kicked out her first trade 5 minutes after the open. Keep in mind, I'm on Pacific time over here. Then the next one was 3 minutes later. Then we had another one 5 minutes later, 2 seconds later, 5 minutes and 10 minutes and 2 minutes, okay? So this little flurry right here really also, because how many times have we seen Holly do this, Steve? You know, we've been watching Holly every day since 2016. Right. So that's 200 trading sessions. Now we're almost through with this year. By the time this year closes, we will have watched Holly do her thing as we sit in our chairs for 400 sessions. When you do that, you learn, whether you realize it or not. So once I see my positive expectations, my compare accounts, and then I also see Holly doing this, that's even more positive reinforcement. Okay, not only did my compare accounts kind of give me a little tell there, but now Holly is reinforcing what my compare accounts have enlightened me with. So Holly starts off pretty early, and if we look at risk off and risk on, and to quickly clarify the difference for those of you who might be seeing this for the very first time, what's the difference between risk off and risk on? Risk off is simply Holly obeying her rule set. She's got 5 different reasons why she could exit a trade. You know, the obvious ones are stop loss was hit, profit target was hit, timed hold. But we also have reduced risk that she can exercise and profit save that we see here. So 5 different reasons. The reason will always show up in here once she closes the trade out. So risk off is simply Holly sticking to her rule set. Just like me, you, or any other trader, or I should qualify that, any sane trader would do, sticking to her rule set. And risk on is simply telling us this is how much you're up if you just held the trade. Of course, it's going to be updated depending on what time of the day it is. So we can show risk off, and we can show risk on per trade. And of course, there's a lot of juicy spread today in between what Holly took in risk off performance and what was left on the table. And let me just bring my little sheet back over here, because that's what we're going to cover next.
Did you notice that the one stock that had the exit reason of the stop hit, and I bring this up because I want to remind people, some of these exit reasons we have a choice as a trader. Do we want to stay in? Do we want to sell half? Do we want to get out with Holly? Or do we want to stick around? One of the only one of those 5 reasons that I would never argue with is stop hit. And look at what happened today. Stop hit.
The hard stop hit.
Adhering to that would have saved you a lot of money. So I never argue Holly when the exit reason is a stop being hit. That's usually going to save you more money by not arguing with her over that one.
Absolutely, 100% true. Hard stops are not to be trifled with. Now, Holly had a real solid performance today on this number of trades that we see on the blotter here. If you held everything to the close, $3.55, this thing did spike up to a little over $4 during the session. And of course, if we're just sticking to the rules on the most conservative aspects of Holly, $1.59 on this amount of trades. Now, of course, there are different techniques that we can use to try to get a little bit more of what we see here, the spread between risk off and risk on. And that's what we're going to cover next. What was the RO opportunity, risk on? Well, let's take a peek here. Let's look at the first guy here as I'm sorting by risk on, CTRL. All right, and here we are looking at the 5-minute intraday chart. So Holly calls the buy right here where the blue line is, and then of course, boom, off to the races. We get a nice little up move here, and then before too long, a nice little retracement. So in the money, out of the money, but once again, the hard stop, 31.98. And you know, that's why stops are there, because if we're wrong, or if Holly's wrong, then that's the maximum amount of damage that we should sustain participating in that trade. But of course, stocks don't always just go straight up. This one takes a little pullback. It had expended a little bit of energy getting up there, takes a little pullback, does not stop us out, catches traction back up to the upside, and then we're in a nice profitable trade. So notice the shaded area here, all right? Holly, why did she get out? Profit save. And this is more or less like a custom, I guess you get the best way to describe it, a trailing type of stop. If the stock gets a little wicky or pulls back a certain amount, then she has the right to go ahead and plug out. So Holly takes 40 cents. So we see Holly taking her 40 cents, and we think to ourselves, huh, well, she got in here, she's getting out right about up in here. Do I like the trade? Is the chart pattern conducive to me? Let me take a look at the daily to give me a little idea of where this thing is, where it might run into some resistance, right? And here we are going all the way back here to 2014 in January. and I've squished my chart up just about as far as it'll go, and lo and behold, what are we seeing over here? We're seeing, you know, not only a breakout from this level, but a continuation. So when we look and we see that, you know, of course, this could be the resistance right here, which is the top of that wick. We can see it never really got to the top there, but it sure did come close. All right. So that's really what I'd be keying off of here based on the signal here. And hey, how much juice do we have left in this trade? So it really is, we can simplify this greatly. And the best way to teach it to new people is to do a little bit of both. Okay. Let's say we got into 100 shares with Holly right here, and we see her peeling out. Okay, well, I tell you what, Holly, I really like the daily, and I'm going to take your advice. I'm going to go ahead and plug out of 50 shares, take my 40 cents. I'm going to stick with the original stop loss here and see if I can make any more. That is me making the conscious decision to go risk on. I see Holly getting out. I think there's more juice in this stock, therefore I'm going to accept a little bit more risk and hopefully make a little bit more, because we had a good, let's see, 91 cents of additional spread here between $1.31 and 40 cents. So of course, maybe every once in a while you'll top tick something and get all of that, but that's the exception and not the norm. But even if you made an extra 20, 30, 40 cents, that's a huge difference here, capturing a little bit of that risk on spread. And of course, you know, if we're just looking at the intraday, it might have been a tougher choice. That's why it's always a good idea to kind of check out what the stock is doing on the daily to help you decide if you want to take a little bit more risk. Now this guy, man, this intraday chart, a lot different. Now, of course, the daily, a lot different as well. But when I see something like this on an intraday, we see Holly calling to buy right here. Well, number one, we have to realize Sunrise Mover is once again kicking out the trade, and we know that Sunrise Mover came in with 59.7% statistical probability that anything coming out of that had a 59.7% chance of working, which is significant. So we've got statistical probability on our side right off the bat. Of course, what my eyes go to immediately is this opening candle here, put in its high with that little wick there. And then as soon as we see Holly calling to buy, which is in that little wick right there, my eyes immediately go to that high and go, well, if it goes ahead and pushes up there, then it's also exhibiting a range break, right? Low was down here, high was up here, Holly calls it here, and then shortly thereafter, it's breaking out. All right, so now I've got two positive factors. I've got statistical probability on my side, and I've also got one of my favorite patterns being exhibited. So it makes my decision somewhat easier. So now we're stacking two positive attributes, and then we may also notice, you know, Crust didn't just knock it out of the park with volume today, but it was maintaining some decent volume levels as well. So we got statistical probability, a nice range break, and volume behind us. Sometimes we can throw in a fourth positive factor and see something that's really happening on the daily. Maybe it's at all-time highs or filling a nice gap. Of course, you know, we did have potential up to the top of the prior day candle here, but it just kind of ran out of steam. But nonetheless, a beautiful chart coupled with statistical probability and some decent volume, and that's what we got from Holly today. Now, she did identify the buyer in this one fairly early. The benefits of identifying a buyer early is that you may have additional opportunity to leverage the position if the pattern you're looking for unfolds, in which case, with Crust today, it did it again right here. Okay, about 11:35 Eastern, what happens? It puts in its high here, goes to sleep for a little bit, and then boom, comes up here and exhibits the range break pattern yet once again. Depending on what type of trader you are, you might have had opportunity up here as well. So you had really three potential opportunities to leverage your position in Crust today. Of course, what did Holly do with this? You know, we had a total of $1.04 on the table. And of course, you can see the shaded area right here. Once again, profit save wins the day for Holly. So she plays it right up here, says thank you very much, takes a little pullback, and then breaks again. So once again, had we stuck in half with Holly, we would have captured who knows how much of this spread, but a nice 62, 66 cents of spread in there. So even if you only capture another dime, nickel, quarter, whatever, you know, that's additional alpha that is between the cracks. As Steve likes to say, you know, this is a methodology to frack out a little bit more alpha down there out of those alpha
fracking.
Now we have a little bit different wake up call. Once again, shows us a beautiful entry. All right, notice Holly takes 36 cents in CRK, and she stayed in it the whole time period this time. Wake up call. Well, we know wake up call. Even better stats than Sunrise Mover today. Came into the session with 66.4% statistical probability. We can see the strategy was designed around a 60-minute hold time. That's why Holly got out. The timed exit expired, correlating with the shaded area here. So Holly makes the buy here and peels out because she's programmed to do so after she holds that trade 60 minutes. Missed out on a little bit here, but we can see what's risk on reflecting now is a loss, right? Because look what it did. Came all the way back down, just like a bunch of the airlines did today. Matter of fact, this chart right here is what a lot of the airlines did, and then they just keeled back over. But there was some nice opportunity, you know, in that first part of the market. All right, so those are examples of risk on, just going, you know what, I see Holly getting out, I'm gonna take a little bit more risk because the chart looks pristine, try to make a little bit extra alpha there. Now we're gonna talk about a trading around opportunity. So let's see, and I took the time today to set price alerts as I did this stuff. So let me find my price alert window here, and we will talk about the trade arounds that were present. All right, so first on the list here, let's talk about, well, let's do the least attractive one first, and that was on REN. All right, so we can see here Holly makes the entry 10:47 Eastern, 7:47 my time on REN. Well, here's the bar where she made the entry. Guess what happened as soon as she made the entry? Boom, boom, boom. Or just red right off the bat. Now, didn't hit the stop. So I see REN down, but the stop not triggered. I automatically come up here and I set my price alert for the exact same price that Holly had the entry. It's green because it executed. So once I set that price alert for the second time that the stock might come through that entry line, and by the way, statistical probability from these plays is good for the entire session. Some stocks will hug the line for a little bit and then go. Some stocks go immediately. But when I see Holly in a down position, I come up here, I set my price alert. You can see it took it a while, but eventually it did crack that level again. Of course, it only stayed up there for a little bit, about a dime in the money, and then folded back over. So you would have been up a dime if you didn't take it. You would have got stopped out for a flat or whatever, you know, you might use as your stop loss. And that was really the worst one of the day. Now let's talk about a couple other ones that worked really well. MTZ. And let me just click on it from Holly's blotter. All right, so more of the same here. MTZ. Ooh, I like it because several things. Well, number one, Holly brought it to us, Sunrise Movers. So we've got really nice statistical probability on our side once again. Hey, there's also that pattern that Jamie likes to see, corresponding with a nice range break there. But you get a little bit in the money and then come back down to the line below, but no stop out, right? So what do? Come back up here and we set our price alert. So we can see here, MTZ, see I set that price alert, 8:08 my time, 19 seconds after 8:08, and this one didn't take too long to fire. From the time that I saw it down here, meandering around, comes back up here, and you can see how it just hugged that line all day, right? Up, session highs, back down again. Now, here we are at the close. So, you know, at any point in the day, as it was ebbing and flowing off that line, MTZ presented some pretty nice alpha. 45 cents at the close, 45 cents back here. So you could have taken a trade that Holly was showing a loser on, gotten a better price than Holly. Sometimes, you know, of course, I'll accept mine at the exact line, but there was opportunity during this little sleepy area right here to actually get a better price than Holly. So trade arounds allow us to take advantage of Holly when she's showing a negative position on the blotter in hopes of getting that second or third push, you know, and theoretically you could have traded this thing several times as it ebbed and flowed, you know, through that little channel that was created there. So, you know, as traders, that's what we do. The important part is finding the stock that's going to be kind to us while we're attempting to trade it. You know, it kind of goes back in time to when I was struggling as a trader. I'm sure Steve and Andy and Dan have some of the same issues. Is back when we traded, I sit there and trade the same stocks every day because they were moving. They were internet stocks or a big pharmaceutical stock. But guess what? When the action comes out of your stock that you love so much because you made so much money and you just have this unnatural attachment to it, well, when the volume comes out and you try to trade that thing, typically the results are not going to be good, you know, and I'm speaking from experience. So rather than try to trade the same old stocks every day, now the name of the game is, hey, let's find where our odds are the best, okay? And it's using techniques like this based off of statistical probability and learning how to interact with the system and developing a methodology that you use every day. Get different results every day, but it's the methodology that we embrace, all right? Not to be confused with a strategy. All right, so the last trade around today was this guy right here, Disc A. Set the alert at 8:08. This one took a little over an hour before it got back up there. And let me just get Holly's data up here. Okay, so we can see here, Holly took a whopping 25 cents because she enters here, kind of hugs the line, won't really pop, and then gets out right about, let's see, what was her exit price there? 16.64, and she made 25 cents, so 89. And about right up in here somewhere. Of course, don't know if we could have got a piece of that. It would have probably came down pretty quick. But the bottom line is, once again, see Holly in a negative position. Let's come back up here, set our price alert, because sometimes it's the second, third, or fourth time that it penetrates that line right there before we get the majority of the move. Of course, on Disc A, not quite 25 cents in there between risk off and risk on profit. But you see here, there's a lot of things that, you know, there's different techniques that you can use to extract additional alpha that you can't necessarily see reflected in these columns. So just keep that in your mind as you move forward and work with Holly. Risk on, risk off, your choice. Maybe do a little bit of both to get in the groove of things, easiest way. And then setting price alerts when you see Holly down on a position, because if it never comes back up there, you're never going to know about it, just like AOBC today. You know, we see Holly down in the position. If we would have came up here and set our price alert, it never triggered because it never got back up there. And of course, AOBC not faring too well today. All right, so let me just take a look at the questions panel, and we'll see if anybody has any questions. Looks like Steve's
been catching up there. Yeah, and while you read that, somebody did ask me to drop in that 3-day bounce in the chat window. So if anybody wants a copy of that alert that I showed in my section, my segment early on, the 3-day bounce cloud configuration is in the chat window. The chat window is near the question window. Just click the little triangle on chat. It'll expand that window, and it should say 3-day bounce with some cloud code in there. So that will allow anybody to use that cloud code and receive the same alert that I was working off of when I was doing my segment. But yeah, I think there's just one question in there that still needs attention, maybe two.
Yeah, first off, can Holly be used for shorting? Absolutely. But keep in mind, you'll notice we had 4 short strategies show up today. But
Coach didn't put him in the game.
Yeah, but due to the nature of the day, it's no big surprise to see that these guys didn't kick out any trades, because these are very, very specific traps, is what I like to call them. They're very specific shapes, if we have to use an analogy. And it takes a very special thing to fit through that shape or to meet all those filters. And of course, today just wasn't a day for the shorts. But yes, Holly does come to the party with short strategies, a couple of really good shorts last week, but only if the statistical probability is there and that specific animal decides to make an appearance. Then we'll hopefully bag it. All right, so we did have a question come through about the Brokerage Plus and how it works with IB. Well, Robert, we can't go into too much detail here right now about how Brokerage Plus works. Let me give you the broad sketches, and we'll cover it just a little bit at the end here. We have a slide. But if you are a Brokerage Plus, a IB user, we do have a module that connects to IB that allows you to take strategies that you've configured with our backtester here, and assuming you feel comfortable doing so, you can automate that strategy. You can have it make the entries and the exits. You can have it make the entries and you manage the exits. It's a pretty complex tool, which is why we don't have the time to go into great detail about it here. All right, and Marguerite was asking, is risk related to stop loss? Yes, definitely. That is a function of risk management. And once Holly does a trade, can we cancel it? Well, keep in mind, Holly, there's no way to cancel a trade here, because this is not, well, I don't know, Steve, what's the best way to phrase that? I mean, this is what the model is spitting out. There's no way to cancel.
Yeah, we're not driving. That's autopilot. That's complete autopilot.
Automatically. So
those are triggers. Mm-hmm.
Yeah, not possible to cancel a Holly trade. And Bill says, Holly didn't announce her trade, but my price alert did.
Well, I was just typing him to make sure that if you want to show him visually, right click in the child window there and make sure action is checked to allow for a sound alert. And that's what you're going to want to do. I believe it was Bill. Okay, that's what I was typing to you. All right. So it's possible. It's the same functionality for the price alert as it is for the AI window. So you may have had one set up on the action and the other one wasn't.
Correct. And yes, Reese, in the future it will be possible, but it is not possible as of yet. Well, Reese is also, let's see, I think Paul asked this question, any update on when we might see a beta version for searching history on Holly trades? So what he's referring to is the ability, which is recently inserted. We've always had this ability in the alert window to come in here and look at the history, to see everything that our alert window had spit out for the day. Now we also have the ability to do that with Holly. We can come in here and say, okay, what did this blotter look like on Friday? Now we're seeing all the trades from Friday. So pretty cool functionality. Of course, we're testing it out. When's it going to be in the beta, available to everyone else? Don't know. And I hate to always even hypothesize, because
when is a word the development department doesn't respond very well to.
Yeah, when's this feature going to be done?
When it's ready. When the bugs are out.
When it's ready. That's what we get. So we're kind of conditioned to
when the bugs are to go. Yeah.
And wait. But the good thing is our development team moves at light speed compared to other firms. So don't worry, it'll be coming up sooner than later. Unfortunately, Paul, I don't know. Here's what I'll say about that. It can't hurt to attend the Wednesday webinar with Dan and Brad, number one, because it's so damn entertaining. Number two, since they're the CEO and the CTO, if they want to, sometimes they'll leak out some advanced versions. So, that's where I'd point you. If you want to try to get something that's not out yet, take your chances on that one. It's not a guarantee, but it has been known to happen. at the chagrin, to the dismay of our developers. Okay, well, I just saw my screen blank out there. Hopefully it popped right back up for you guys. All right. So, okay, I think we're caught up with.
By the way, anybody can be a beta tester of Interactive Brokers Brokerage Plus. All you need is an Interactive Brokerage account, and you need a Premium Trade Ideas account subscription, and you're pretty much in the mix of being a beta tester if you want. You just don't have the steps to show you here, but I'm answering specifically. Paul says, can I be a beta tester? Smiley face. Well, again, if you're a current user of IB and you're a current Premium Trade Ideas subscriber, email us at info@trade-ideas.com for what the next steps might be on that.
Sounds good. Okay.
And Bill, it looks like you Holly alert changed to a beep. Ah, that's what it was. So you got to go back in there and assign the type of alert audible you want to hear. If it's more than a beep, I think you probably prefer the text to speech like I do.
Indeed. All right, so moving right along, we're doing pretty good on time here, and I was hoping we would have time for this, because the sector heat, just like Steve was showing you the sector top list, right? That's an excellent way to get an idea of what sectors are hot in the morning. And of course, just like a stock play or a chart pattern, there's always a lot of different ways to get the same information. Kind of like, hey, a stock that's up 3% is going to look the same as a stock taking, well, both patterns can be identified by a stock up 3%, a stock up 3 standard deviations, or maybe a stock experiencing a 3% positive VWAP divergence. Those are all 3 ways to describe the same pattern. So just like Steve was using the top list to identify the hot sectors, I'm taking a little bit different of approach and using our compare count windows to identify not only, well, in a nutshell, to identify the sectors where there is extreme buying in the first 15 minutes, along the same theory as the way I was using the compare counts that I showed you guys earlier. So also after the first 15 minutes today, this is what my little sector heat map looked like, okay? Now keep in mind, this is the same configuration that's driving the other compare count windows, looking for that accelerated high volume buying or selling in the first 15-minute period. Well, of course, real estate and a lot of these are but oil and gas, 75% accelerated buying this morning. So if I'm getting this information 15 minutes into the open, is that good information to have? Well, let me show you something here. All right, so once I get that information 15 minutes into the market, I take one of my favorite top lists, or this one's pretty much carved out just for this specific purpose. I'm just using the earnings per share to weed out any ETFs and iShares because I don't want those. Stocks had to have traded 100,000 shares already today, and it has to average 300,000 over the past 5 days. And then what I did, as soon as I saw that high reading on oil and gas, what do we got here? We got only the following list, oil and gas. Now I've also got this window pointed to show me this is what the list looked like after the first 15 minutes. So from 6:45 to 6:50 my time. Now if I just kind of start scrolling through these charts, oh, here's 15 minutes for RDS right here. Not a bad signal to get 15 minutes into the open. Okay, well, what about Big Daddy Exxon? Well, a little bit different here. 15 minutes we're looking at right here. We did get a little downdraft. Of course, timing's not perfect on everything, but look what happened to Exxon shortly after that. And of course, I'm just going to kind of leisurely scroll through here because you're going to see, you know, what I'm talking about. 15-minute area here, CRC. ECA, 15-minute level right here. What do we see? You know, of course, they're not all going to work, but if we scroll through here, you're going to get a lot of them that look just like this, okay? So once again, the only reason I was, you know, I did this is because of what I saw from that sector heat map. Of course, Steve probably saw the same information coming through his top list, right? Just different ways to view the information. Airlines were also on fire in the first 15 minutes, but we didn't get these types of patterns. If you were trying to play the airlines after the first 15 minutes, you had a little bit of upside. Of course, that one's probably the least attractive. You know, JetBlue, 15 minutes here, upside. UAL, 15 minutes here, upside. But all of these airlines, if you didn't take the cookies while you were up, then they pretty much all retraced on the day. But still some good, nice upside opportunity. Being in the money is half the battle. How you manage it once you're up is equally as crucial. All right, so just kind of want to give everybody an idea of how you can use different tools within the product to identify what could potentially be hot for the day. Top list form, compare count form. As you can see in this example, I'm using the compare counts and then quickly modifying my top list to look only at those sectors where I have the accelerated buying and selling. Okay, just catching up on questions here.
Busy day on the questions.
John, typically, you know, which ones you're going to trade are going to be dictated by the chart pattern that's unfolding in front of you. You know, if we look at some of these oil stocks, CRC, if I'm getting told that the oil sector is extremely hot, and then I pull up this guy right here, and I'm seeing this little pattern, 5, 10, 15, hey, you know, I'm not even the most proficient chart reader, but I understand the basics. If this was the wick of the opening 5-minute candle, and I'm getting told, hey, I might have some serious upside in the oil and gas stocks today, then buying it right here, anywhere in this candle, and then using my stop right down here, that's just pretty bread and butter right there. So, you know, knowing where to look is one thing, but then being able to pick out which things fit your trading style is obviously going to be dependent on the animal or the chart pattern that you like to play. Maybe I wait for it to develop a little bit. You know, I'm looking right here, this thing just went sideways perfectly and then broke out with volume and then headed higher. So it really, you know, just to get back to your question, it really depends on the chart pattern that you typically like to play. All right, Omar, I'll go over that one more time. So I've got a copy of this guy sitting on my desk right here that just has these basic filters installed. If the config screen will come up there. So, you know, this is just like what I call a skeleton key configuration. 100,000, 300,000 a day, no ETFs or iShares. So when I look, you know, 15 minutes into the day, when I see oil and gas raging, okay, then all I have to do is come over here to this guy and right click. I don't have to change any filters. All I have to do is pop over to the symbol list window and point to my oil and gas list on the following list, and voila, there we have it. And of course, if you see another sector with extreme buying, all you gotta do is pull one of these, duplicate, come in here, point it to the other sector. And of course, it's always beneficial to kind of rename your window, because if you point this one to accommodations and food service, you don't want it necessarily saying oil. You would want to, you know, change it accordingly. So then, boom, it's really easy just to keep duplicating these windows and pointing to the list that represents the sector. So I hope that clarifies. No problem. All right, Omar. Okay, so on that note, looks like we're about 4 minutes till end time. Before we bring Scott in, I just wanted to kind of try to address a question here. How do you use the 1 minute, 5 minute, and 10-minute volume? Well, that's a good question. And the way I look at it is this. Relative volume is something that everyone loves, including myself, but it's not the end-all, be-all, all right? So here we are looking, you know, let's see. Let's see what CRC, okay. I tell you what, let me go to a little bit different time of the day here. Well, I guess it doesn't really matter what time we're looking at here. Here's the gist of it. At any point in the day, you're scanning a list, this list, any other list, and you see relative volume of 7.4. And the chart is conducive to you. You're thinking about trading it. The risk is in line, the chart pattern's pristine, the risk is low, and you look at relative volume and you see 7.14 and you think to yourself, well, damn, this thing's going to finish trading 7 times the amount of shares as it normally does. Well, keep in mind, relative volume in and of itself is predicting. It's predicting that based on current volume levels and if the volume level is sustained or not. So you see, I might pull this up, the chart pattern might look pristine and relative volume might be showing 7, but I might look over here at the smaller time frames. Of course, if this was in a live market, this would not be a good sign. It would tell us, no, there's no volume at all in the 1 minute time frame. But in any of these time frames, a value of 100 is normal. So you look at this stock and you see 100 in all these columns, you can see that it's doing normal volume on these time frames. But all of a sudden, you pull up DNR, and if 100 is normal, not only did it have high relative volume today, but in the moment, it's trading almost 17 times normal 1 minute volume, 14 and almost 9. So see, this is a real good way. Of course, it's always really important to know what the volume levels are when you're about to participate, not what has been or what might be, but right now, what's the volume level? And relative volume is extremely slow to change during the day. That's why these little guys right here can be very enlightening, because whether it's our charts or anybody else's, trying to look at these bar charts or these volume bars down here, not the most effective method.
I also like to see stocks that are trying to make a new high or break out above today's high or yesterday's high or any significant level. I like to monitor the 5 minute volume, and you know, 100% is normal volume. If I pull up a stock and it's doing, you know, 27%, it's like, forget it, this thing's just making noises. But if it's getting ready to make a new high and it's thinking about breaking above a big resistance level, and you look down and the 5 minute volume is posting 400, 500, 600, get excited, because that's Trade Ideas technology giving you an edge right there.
Absolutely. And of course, once you see big volume and you see stocks popping out like this with no overhead resistance, you know, if I saw this breakout, and even if this breakout, you know, had paltry volume behind it, well then the odds of that thing breaking out and staying above are just simply a lot less from a statistical standpoint versus if it was fully chocked with volume. It's like the gas in the tank. You know, we know that the tank is full. We're not going to jump in there and hit the gas and then sputter out and fall back down, right? So I hope that clarifies, you know, the value in those smaller time frame volume filters. All right, looks like we're at the top of the hour here. So Scott, if you're ready, we're ready for you, buddy.
Sounds good, thank you. Yeah, so a couple items before we leave. They did mention in the presentation today about Brokerage Plus. So if you are an Interactive Brokerage client and you have a premium Trade Ideas subscription, you can go ahead and try out automating your trading or managing your portfolio through it. Just email info@trade-ideas.com. The Brokerage Plus, for help, the Brokerage Plus module is already built into the current releases that are available, including the beta and the standard. You do need the active interactive brokerage. You do need to have an active interactive brokerage account to be able to use that, and it's only in the premium version of Trade Ideas. But if you got both those things going on and you want to try this, we would like you to try it. Email info@trade-ideas.com for help setting that up. We'll get you going. We have a podcast that comes out every Friday. There was a new one just this last one with Jamie and Dan. So just type in Trade Ideas Podcast into the search box in any of your podcast applications, whatever you use to listen, and it'll come up. Then you can subscribe, get the newest episodes, and stay tuned for Fridays. We have a discount code that we mentioned early at the beginning of the webinar, and here it is now for you. It's a new one, Holly Snap, all caps, and you can save 15% off your first month or year of either a premium or a standard subscription. Works for both annual and monthly. That includes whether you get standard or premium, the full hour of training, the hour of power with Jamie or Steve or Sean or Andy. So, when you become a subscriber, go ahead and register for that training and get that shortly after you become a member. It's great onboarding. When you have, if you have any questions, email us info@trade-ideas.com. It's the best place to send your questions. Make sure you follow Jamie at QuantBot and Steve at Today Trader and Dan at Trade Ideas One and all those guys on Twitter. And follow us on Facebook, Trade Ideas Pro there. Thanks, everyone. Thank you, Steve and Jamie.
All right, sounds good. I'll see you tomorrow.
Yeah.
Thanks for popping in, everybody. See you guys tomorrow.